Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines. Markets ignore Omicron surge. Sensex closes up 651 points, stays firmly above 60,000. Nifty heads back to 18,000. Airline traffic and hotel occupancy fall off the cliff across India. Hapless flyers continue to abort travel plans. Get date change waivers from airlines. Gold prices buck stock trend. 10 gram of the yellow metal now available at close to 47,000 rupees, lower by nearly 3,000 rupees in 2 months. Crude oil prices head upwards on depleting inventories and hopes of quick recovery from Omicron. Top stock picker Ramesh Damani tells Business Today TV that worries over Omicron will fade, says the best 10 years are coming for India. Markets began the second week of the new year on a strong footing amid expectations of strong earnings from the initial batch of companies this week. Sensex and Nifty extended gains to a second straight session, Sensex rallying over 650 points to reclaim 60,000. Nifty also gained almost 200 points to trade above 18,000 for the first time in nearly 2 months. Gains were seen across the board, with pharma being the only sector under pressure. UPL, Hero Motocorp, Titan, SBI and Maruti were top Nifty gainers. Banking stocks led indices higher, with Nifty Bank gaining over 600 points. Ahead of its earnings, Wipro slipped in trade. Other Nifty laggards included Nestle, Divi's Labs, Asian Paints and Power Grid. Analysts believe the appreciation in the US 10-year yield and strengthening US dollar are likely to pose headwinds for the markets. Joining us now, our global business editor, Udayan Mukherjee. Udayan, markets are once again consistently trending higher. We're up back at about 18,000 on the Nifty now, so looking good.
Yes, Abha, and it's a bit of a surprise actually, the swiftness with which the market has come back. I mean, from that low of 16,500 or 400 just a few weeks back, we are back to 18,000 already. I didn't frankly think that the year would begin on such a strong note because, we are entering 2022 with all kinds of concerns. I mean, a full-blown Omicron wave fleshing out across India and other parts of the world. The Fed is signaling aggressive interest rate hikes, inflation concerns linger. And at the midst of all of that, the market's saying something else that, maybe you guys are fretting too much. So the price action has been very surprising and very, very strong, unexpectedly strong, I would imagine. Because my best guess was, I would be honest, is that the Nifty would sort of be range bound between say 16.5 to 17.5 kind of thousand, at least in the first part of the year. And overall for the next few months, it should be ranging between say the lows that we hit, 16,500-ish and 18,500, the 2,000 point Nifty range, till we get more clarity on the global situation. But I think the market has other things on its mind, the pace at which it has come back to 18,000. So let's see if this is like a pre-budget kind of a move or something else. Yeah. But I would concede that it has been surprisingly a strong start to the year.
The Omicron-led wave of the COVID pandemic is underway, and though centre and states have so far avoided lockdowns, there are 2 sectors which have absorbed the full brunt of the rapid downturn. Airlines and hotels are witnessing mass cancellations and staring at debilitating losses.
Domestic air traffic had finally taken off by this past December. With COVID in the rearview mirror, travellers were booking holidays and airline passenger load factors were hitting 100%. But it took just a weekend to change the mood and for air travel and room occupancy rates to fall off the cliff. The dawn of 2022 brought with it Omicron, and domestic air traffic plunged virtually overnight as a result. Nearly 400,000 passengers had taken to the air a day after Christmas. The number fell by 20% within 5 days by 31st December, dipping by another 20% to around 2.41 lakh passengers on the 8th of January. There is some good news for passengers though. Those who had booked air tickets in advance have been offered a window by all major airlines to reschedule the date of travel without the prohibitive change fee normally charged for this. Indigo, India's largest airline by market share, has done this, as have Air India and Vistara. This provides some relief, especially to students who had booked their tickets and had to cancel them because college campuses which were set to reopen have decided to remain shut.
Almost 40% increase in queries regarding workation. They're looking for locations where they can go and work from that location. So that has gone up significantly. People are also looking to go out via road, where also places that are not very heavy traffic and congested. Look for remote places, look for places which are not in high demand but are very exotic.
Hotels have also emptied out. Popular tourist spots like Goa, Cochin, Ooty and the hill stations in the north were packed with tourists in December. The virus, however, had the last laugh, and according to industry sources, the flurry of cancellations is so intense that hotel occupancy levels have fallen to single digits. Revenues are just 10 to 20% of December levels. Hospitality Industry Association, FHARAI, has put the losses due to cancellations in the past couple of weeks at around 200 crore rupees.
We need to realize that 30 to 35% of this industry has already shut down. When I say already shut down, it's not going to revive. It's not going to survive and it's not going to revive. Secondly is the problem of jobs. Almost 50 million jobs have been lost. And the successive waves and continued disruptions have actually created a very volatile economic environment in the sector.
Night and weekend curfews in several metros and states have caused particular distress to the restaurant industry, and the curbs are rising. Delhi has now put a complete stop on dine-ins and asked restaurants to deliver online. With Karishma Asudani, Bureau Report, Business Today TV.
Gold struggled in Indian markets today, extending recent losses in the precious metals. Gold futures fell 0.16% to two-month lows of 47,375 rupees per 10 gram on the MCX. The precious metal has fallen sharply from December highs of 48,700 rupees, hurt by rising US bond yields amid the Fed's hawkish tone. In the international market, gold prices were hovering around a three-week low. Silver also saw a slump in today's trade. Precious metal futures dipped 0.36% to 60,388 for a kilogram. While gold prices may be losing sheen, the 9th tranche of the sovereign gold bond scheme has opened for subscription from today. The subscription will remain open for bidders till 14th of January. While investors can bid for a minimum of 1 gram of gold at 4,786 rupees, the maximum limit of subscription is 4 kilos. There will be a 50 rupee discount for those bidding online. Lack of clarity on how gold will move in the coming month may hinder investment. As per experts, if prices drop, it may be better to subscribe in later tranches. Here's what else is making news in the corporate world. Pine Labs is moving ahead with preparations for a US listing as per media reports. The digital payments provider, backed by Sequoia India and MasterCard, is seeking to raise about $500 million. The listing could give Pine Labs a valuation of about $5.5 to $7 billion. US e-commerce giant Amazon has challenged a Delhi High Court order that stayed arbitration proceedings against Future Group in connection with a deal struck in 2019 between the two companies. The special leave petition was filed on Saturday and is expected to be taken up for hearing this week. Four years after the Škoda Kodiaq was launched in the Indian market, the car maker has updated its internationally successful SUV with new features and design tweaks. These include improvements to the engine chassis, driving dynamics, safety, in-cabin entertainment, connectivity, and other comfort and luxury features. Private lender RBL Bank announces collaboration with Google to strengthen its customer experience strategy. This involves serving its rapidly growing customer base through its digital platform Abacus 2.0, RBL and Google claim this collaboration will enable RBL to better manage customer data and analytics. Commercial vehicle manufacturer SML Isuzu has decided to temporarily suspend production at its manufacturing plant in Punjab. The company said it was doing so in view of the sudden increase in the COVID cases. Rising cases are resulting in challenges in its supply chain, likely impact on the demand of school buses, safety of its employees, and optimized inventory.
Welcome to this pre-budget market special, Business Today. I'm Uday Mukherjee, with me is Abha Bakaya. And on our guest today, a very special guest, a veteran of many bull markets and a survivor of many bear markets as well, the one and only Ramesh Damani. But Ramesh, very good to see you after a long time. But, I must start by asking you how you're looking forward to 2022, because, after many years, this easy global money, which has been such a big underpinning of this bull run, is probably on its way out. So how do you see markets doing in the backdrop of that in 2022 as we learn to deal with rising interest rates after so long?
Thanks, Udayan. Thank you for inviting me, and it's great to be back on with you after so many years, and Happy New Year to Abha too. Udayan, I think 2021, as you pointed out, was actually very good for our wealth, but very poor for our health. But I think 2022 promises to be good and bountiful for our health. I think we're now at the end stage of this pandemic. It's going to become endemic, I feel, and also good for markets. I personally believe that we enter this week has been a very good week for the Wall Street, the best start in 20 years. And I think the rest of the year will be pretty positive too. I think we're moving to a sweet spot for India. And I remain, optimistic. I think the bull market that started in 2019 is well and alive and will probably take us a lot higher.
So you're in the camp which believes that we are going to make a new high this year, despite predictions of all this volatility and inflation fears, etc. You think we'll take out that nifty high and make a significantly higher peak this year?
Almost certainly. I feel that, Udayan. Let me just put the intellectual case for this bull market to you, and then we'll talk about inflation if you want. Udayan, the two pillars or the two poles of the global economy have been, of course, US and China, and both of the last decade have added a lot of heft to the markets. But they're now moving in slightly different directions. The Chinese want what they call common prosperity, which sometimes means cutting down their businesses to size. And the US is starting its great socialist experiment, like the Great Society of the 60s under Joe Biden. In any case, it's under some sort of political gridlock going on there. But what we are seeing in India is perhaps, someone rightly pointed out that China made the physical world, India will make the digital world. So I think we have a unique opportunity. The reform process that has started in India, the cutting of corporate tax rates, the PLI, the disinvestment, I think will all add up to our place in the sun. And I believe that the smart money in the Wall Street has kind of figured it out, that if we, do our act right and get our act right, this could be a long and sustaining bull market that we've talked about for maybe 30 years. But this could be the real McCoy, if you believe, at this time. Now, here's the intellectual case again that I think Larry Summers put it best when I heard him. He said that if India can grow at 8%, and we're growing at about 9% right now from, albeit a low base. If we grow at 8%, that in effect means that in a generation, in 20 years, we'll quadruple the size of the Indian economy. So we'll grow from 2.5 trillion to 10 trillion people by the time India turns 100. So this is a great chance for us in the sun. There's a crack open because of what's happening in the world. And India being a large economy can take advantage of that. And I do see signs that we are taking advantage of that.
So just to bring it back to the budget, is there a lot that needs to be done or you really expect to happen? Because a lot has happened already. I mean, I don't think the corporate sector has had it so good in terms of taxes ever. So are there expectations from the finance minister, or I think stock markets are happy if there is status quo and not much is done in this budget?
Udayan, budget is obviously a big media event, and it used to be a terribly important event for the Wall Street. and its importance is diminished. Of course, there'll be, as the budget date rolls around, people will ask what will be the fiscal deficit, will there be an inheritance tax? All these potpourri of demands and counter demands will go on. But the best analysis I read of the budget for the intellectual framework was by an editorial by Nainan in the Business Standard in a pink paper, when he said that India's tax to GDP ratio now, not tax to debt to GDP ratio, is going from 50, 60 to almost 70, 80% now. And interest as a percentage of our budget is now going from 34% to 41%. Tax to GDP collection remains at about 10% over the last decade. So he says if India needs to raise new revenue, which of course we need to do, how do we do that? We can do it either by expanding the revenue base or increasing taxes. And I hope this budget will lay the intellectual framework that we have tried socialism, unlike what China is trying now or what the US is trying now. It doesn't work. We need to make a bigger pie. And the budget will, lay a lot more emphasis on making a bigger pie. So then we can distribute the money more equally. So I think the answer to the budget would lie in, as we always do in the government's, how it handles the fiscal picture. Will the deficit come back from 6.8 to 6%? And what are the streams to raise more revenue? Because clearly the government has had buoyant tax collections this year, but there will also be a lot of expenditure on behalf of pandemic. So I think in the budget, I would look at those two numbers. What percentage is being taken away by interest rates, and what is the government doing to fall the revenue shortfall that we seem to consistently face. I think the other things are, par for the course. Some are give it, some take it. As long as they don't come with the inheritance tax, I don't think the market will be too disappointed.
Okay. Mr. Damani, you've been, very big on the kind of capex that you anticipate now going forward. Firstly, I want to get a sense of your thought process here as we enter into new year of investing, but also what more can we see from the government in order to really incentivize or to see that actually happen on ground?
Well, the capex is, as you know, about front-loaded by the government itself. I think there's some capex going on by private sector, perhaps, in cement, in petrochemicals, there is solar energy, there is some capex in there. The big problem in India, as Udayan pointed out, is earlier question has been inflation. And it's now a global phenomena. But the Fed, has come out with very stern statements recently saying that, they're going to fight inflation because that is the mandate. They can't seem to be sucking their thumbs when inflation is, at 6.8%. But here's a couple of things that I'll put for your observation, Abba. First, that the US 10-year Treasury, while it's gone up recently, is still at 1.8, while inflation is 6%. And the inflation-protected Treasuries at a 3% premium. So whatever has been going on, at least the global markets don't expect inflation to be very high or very violent over the next few years. So while the Fed is saying it's not transitory, I believe they have to say that. They have no other choice. I personally believe that inflation will come down. The real problems in supply bottleneck chains, 90% of global traffic is carried by the sea and 9 carriers control that. So I think those will sort itself out maybe in a year's time or 6 months' time. I think inflation will remain benign. And here's the other thing that the market doesn't seem to anticipate. I think China will continue to fight a zero COVID policy. The reason they will do that is because first they have the Winter Olympics. So they want to keep a spread of Omicron down to the minimal level. And secondly, they have a very important National Party Congress in the last quarter, where Xi Jinping will again be re-elected for life. Now, they want to keep Omicron, subdued up to that point and say they managed it well. So that means that China will have huge amount of investable surpluses, which they'll invest in the T-bill market in America. So interest rates will remain low and inflation will become more benign. So I think there is reason to be optimistic about global equities, but more reason to be optimistic about Indian equities in 2022.
You are a keen student of disinvestment, Ramesh, and you've held very strong views about it in the past. What's your thought on how this whole divestment process is moving along? Because Air India was a big tick in the box, but BPCL has really dragged its feet. What are your expectations from the finance minister this year in terms of the divestment calendar, and how much will actually get done?
Well, I'll take it as two questions, Udin. What about the disinvestment process and what about the public sector units? Because as you know, you and I have talked many times previously about the public sector disinvestment policy and the investment merits of that. And frankly, I'm a little bit tired of hearing common friends come and badmouth the PSUs over a period of time. But here's my couple of points, Udin, for what they're worth. First, any investment is forward-looking, not backward-looking. But even let's look backward. Let's say, what have PSUs done? And I'm very tired of analysts coming on television and saying, oh my God, look at the PSU indexes underperformed for 10 years. But if I included Infosys and Wipro along with DSQ and Silverline, even tech would not have a great performance. You have to look at these stocks individually rather than lump sum in PSU because they're quite diversified base within the PSU. But even let's take your case, let's look back. I own two stocks which I've talked to you about many times in our previous meetings, Bharat Electronics and Bharat Earth Movers. These stocks are 100, 150x over the last 10, 20 years, which is a CAGR of about 24, 25%. And that is without dividends. So these are exceptionally good companies. The trick is to find the good ones. They are not really all bad PSUs, all good PSUs. They're good and bad PSUs. So I think currently there's some lot of attractively priced PSUs that I look at. Coming back to your specific question of disinvestment, of course, it's been very slow. Of course, it's been very tedious. And, but, that's the nature of the body politic in India. I'm surprised given the fact that the Prime Minister itself is behind the program, given the fact that he has a stable mandate in Parliament, given the fact that now you raise oil prices and no one even raises a red flag somewhere. It has been so slow. But, I mean, I don't know. I wish the Prime Minister would step in and, make sure the LIC does well. My one suggestion to the Prime Minister's office at this time is that hire some smart merchant bankers. Don't pay them, $100 or $1,000 to give to the lowest cost bidder. Tell someone that you will be rewarded based on the market capitalization you paid for these companies. I think these are very ripe value stocks. The market is moving towards valuations. And I think I'm hopeful that disinvestment and PSU investment will look much better in the next 3 to 5 years than they've looked in the last 3 to 5 years.
Catch the whole interview with Ramesh Damani on businesstoday.in and the Business Today YouTube channel. That's all from us on the show today. Thanks so much for watching.